Hi, I'm Michelle Koppel. I'm an enrolled agent specializing in the Employee Retention Tax Credit. So today I want to answer a few more questions. One is, what if I use a PEO? Can I still get the ERTC? So let's just discuss what is a PEO. A lot of people don't know, and some people don't know that they are a PEO. So PEO is a professional employer organization, and they file the payroll under their EIN. So you have an EIN, your employee identification number for your business, but that is not how the payroll is paid. It is paid through the professional employer organization on their own EIN. And what that means is that they file the 941s in their name, and they file the W-2s in their name. So if they file the 941s, then how can you apply for the employee retention tax credit? Because that is filed on Form 941X, an amended 941 to claim the refund. So I just wanted to go over this. What happens? So we have a number of people who are using PEOs and they are applying for the employee retention tax credit. But what happens is you have to work with the PEO. So now there are many such as Insperity, TriNet, ADP has a whole department that's a PEO department. If you get 941s, you are not a PEO. If you have a 941 in your own EIN. So they file the 941 in aggregate with many other companies. So they may file a 941 that essentially has schedules for 2,000 different companies. So what happens is you have to talk to them, and then they give you special forms that they want you to fill out. A lot of times they're having clients attest themselves that they qualify. This is a little bit dangerous. I can't imagine that they could do that, qualify all of the clients. So what we do is we do all the qualifying, we fill out all the spreadsheets, and then that gets submitted to the PEO. The only issue is it's taken an exorbitant amount of time. I do not even know one PEO who has turned in their 941X to the IRS. In the beginning, it was delayed. The IRS did not have the software to process the PEOs for the ERTC. So now they are processing them, but I do not know a single person who is using a PEO who has gotten back a refund. So the PEO will file the 941X, and you have to work in conjunction with them. And then the refund will not go to you directly, it will go to the PEO company, and they will in turn write you a check or pay you your refund amount. So yes, you can get an ERTC refund. If you have a PEO, it's just as slow as molasses. So owner wages are ineligible for the ERC. And what are owner wages? So if you are more than a 50% shareholder, then you are an owner. And you and your relatives your wages do not qualify for the ERC. So in the case of a husband and wife who each own 50%, the IRS considers you 100% shareholder. So husband and wife each owning 50%, that's majority shareholder, and any of your relatives would not qualify for the ERC, the wages for any of your relatives. If you had three brothers and they each own 33 and a third percent, and they own the business together, they are considered 100% shareholders. So any of those three brothers and any of their relatives, their wages do not qualify for the ERC. So let me just show you. This is again IRS Bulletin 2021-49. So we've kind of gone over what owner wages are. So other wages that are not qualified: a child or a descendant of a child, brother, sister, stepbrother, stepsister, father, mother, ancestor, on and on. So I would suggest you read this. This is on about page 26 of this bulletin, which you can look up. So what other wages are not eligible? So there's a basic rule of we don't double dip. So any wages that we use for PPP forgiveness cannot be also used for ERC. And that would be, we look at Form 3508, which is the application for forgiveness, and we see if you used 100% payroll expenses for PPP forgiveness, you were allowed 40% of other eligible expenses. So we have to use what's on that form 3508. It cannot be amended. So we use that and the time period that is entered in there, if you are 8 week or 24 weeks that you used for paying of the PPP wages, then we have to use that in our calculations and subtract those wages out. R&D. So some people are doing the R&D credit, so that's research and development, and that has its own special rules. So most of the employees of a company are not, their wages are not eligible for the R&D credit. It would be the people who are in the research and development department. So usually you need to work with that client and get that list of people and what percentage of the wages were used for the R&D credit and subtract those out. Again, no double dipping. FFCRA, that's COVID sick leave and COVID family leave. You already got reimbursed for those wages. I believe it's line 11A or B on the 941. Those wages have to be subtracted out and are ineligible. So owner wages, as we already discussed, sick leave and vacation wages that were accrued prior to the period of eligibility, those cannot also be used for the ERC. So what I just do is if you qualified in March, April, and May, mostly people don't even know when that sick leave and vacation pay was accrued. I just take it out to be safe. It's not that much money. It's better just to be safe. So those are not eligible, and obviously the PPP wages. It's important to understand that the definition for wages is different for the ERC than it is for PPP. For ERC, wages include employer paid health insurance, and it includes wages by the covered dates, the dates that the wages were earned. So if you're getting a payment on the 5th of the month and it covers the prior month, you've got to calculate back into when the wages were earned. PPP wages are wages that were paid or earned. So it's both. So they're different definitions of wages. So we go back and we calculate this. This is the covered period, the pay date, and here's the covered period, and we calculate that out. So these are the updates that I have for you. If you have any questions, please send me an email, michellekoppelea@gmail.com. Thanks a lot.